What is up, everybody? It's Big Cheds. I am coming to you, what is it? September 9th, 2022. This is a replay from the Twitter Spaces I did a week ago on September 2nd. One of the things I like to do is I like to upload these spaces to my YouTube account for safekeeping. So I'm basically, for the next 90 minutes, just going to be playing here the spaces and recording it on my channel. I will probably be hanging out in the chat room as well, so you can ask me questions if you'd like. But without further ado, let's get this party started. Thank you so much. Play. Thank you. If you're listening live, just give it a few minutes while I get the spaces going. It's not a big deal. It's just me and you. I haven't done one of these in a while. If you like these conversations, go to my YouTube channel, Ched's Trading. There's a playlist called Spaces, and that's where I take these conversations and I upload them for safekeeping. Probably have at least 8 or 10 of them by now. So this will be uploaded again if you're listening on replay. Thank you for coming. So listen, what I want to do is I want to bring you in on the conversation. I want to kind of hear what you think about the market, or maybe, not necessarily in that long terms, but just give us some brief comments and maybe ask a question. We'll see how long this goes on for. I may or may not bring a friend on, but it really just kind of an informal conversation. And I enjoy these. I'd like to say, please request to speak. There's a button in the bottom left. It says to request microphone. I'd like to hear from people who've never spoken before. I know there's many of you who just listen, which is great. We normally have a really nice audience. But for me, it's fun for me to talk to new people. I'll probably see many of the same faces that I see every time. And it's great. I enjoy talking to those people. But I really do also enjoy new people. So I would especially encourage you, if you've never spoken before, please request to speak. What you want to do is make sure Twitter has access to your microphone. So when you come up, you'll be able to speak. I want you to wait until I call you. So I'm going to handle the muting. 1 second. Sorry about that. I just had a phone call. Make sure that Twitter has access to your microphone. Let me handle kind of the audio. So wait till I call your name. We'll go from there. So again, please hit request. I'm going to wait until we have a little bit more of an audience and we have some more people requesting to speak. So just hit that button in the bottom left and then we'll get things going. All right, folks, this is a Friday night hangout. Market update, ask me anything. Not sure how long it's going to be going, but it's a fun conversation when we can kind of reach out and talk about what's going on in a little bit more of a not as condensed a form. Just a few words in a tweet are so brief and it's hard to have much nuance or much of a conversation. So I'm going to bring some folks up here right now. We'll get the conversation started. Please do wait till I call you. And again, I'd like to hear more of you. I'd like to see more of you requesting to speak. Let's see one more here. All right, Oliver. What's going on, Oliver? What would you like to say?
Hey, Chad. Well, first things first is just thank you for doing these things and definitely posting your content. It's really helpful to get educated. I haven't made it out to your Bitcoin live yet. I'm not a huge active trader, but definitely appreciate your content and I'm going to keep following you and keep learning and I'll probably make my way over to Bitcoin live. I don't have a question, but you mentioned if we want to talk a little bit about the market, in general. I am just amazed at the fact that we are still pumping out this inflation at this high of a rate. And I just don't see it's just weird to be in the US and to have this much inflation. And I absolutely see a little bit of a hammer kind of coming down from the Fed. And I just don't see this kind of the market seeing its way a good bit higher until that's taken care of. Of course, rallies and those kind of things So I definitely think that we're probably going to get closer to the lows that we saw in June, and
Okay.
you know,
In what period of time? Like sooner or later or what?
I'm not so concerned about trying to call the timing of it. I think as
Yeah.
we see the data come in, we the market, the stock market, which is obviously there appears to be a good bit of correlation with the crypto market. The stock market is
Hmm.
just overreacts. The media and everything. There's just so much stuff. So I think it's
Hmm.
inflation is just through the roof. The Fed is going to come down
Okay.
with a hammer, and earnings are going to be coming down, margins are going to be tightening, and I think it's going to get a little ugly. And I think it's going to
Right.
be a bit ugly and not pretty easily through the end of the year, and potentially into the probably a few more months into the new year. Those are my thoughts.
That's great. Well, first of all, thank you for stepping up. A lot of people are just kind of listening, and you were willing to step up and contribute, which is awesome. Thanks for your comments about like just Twitter's fun for me. I enjoy like I can like I like that I can create value. It's nice to have a skill where
You
I can
do,
like
you do.
you know, and but I'm trying to get better too.
You
So
Yeah,
it's fun.
awesome
So, but
stuff.
thank you.
Awesome stuff, man.
Um, check out. There's a couple free Bitcoin live reports out there.
Yeah.
If you're just for more, you can check that out. What you said about like the fundamentals make sense. It seems to me like the consensus. I mean, the Fed said basically they have to like create demand destruction. Like there's too much froth.
Hmm.
So if I'm thinking about like a long-term trend, if it's a long-term bullish trend, having this period of weakness isn't so bad. If we're thinking about equities, if it's bloody for a little while, like
Right.
that could set up what 3 or 4 year run. If you could
Correct.
have something like that. So if you kind of step back and think about it, that's fine. But then that kind of points to like how you manage your risk and where you're entering in this cycle. Because there's cycles to everything, and trends need to consolidate. So you can get in at the wrong end of a consolidation, end up getting shaken out before the move does what you thought
You're
it would
right.
do. So
You're right.
that's
Good
the
point.
eternal name of the game. I mean, Bitcoin. I mean, the weekly chart looks pretty terrible. Below the 200, I think you really can have no real confidence. What were you gonna say?
I said good point.
Oh, so I mean that's we the daily chart. A little bit more granular. I mean, are we going to try to do a W bottom? You do have a minor trading long level right about 20.9K just for a small trade, but you've got 25.5 resistance. You've got a bunch of overhead, resistance with momentum strongly in the other direction. So it's just you got to get above the 200 in the weekly. So how it kind of in what form it tests that low as you talked about the June low. I mean, we don't know what it will look like, but I'm kind of I just spitballing for it, retesting it, and then breaking it a little bit, but then recapturing it within a couple days, creating like a
Okay.
spring, and
Okay.
that'd be something I would be looking to go long on, where it would be like a panic level. You'd flush the stop losses from the people who bought in the first low,
Hmm.
like trigger those stop losses and then bounce. I mean that you kind of see that kind of stuff.
Yeah.
So I mean, just anyway, but those are some thoughts.
Okay.
Yeah. So we have to see this play out. Look, there's going to be opportunity. That's why liquidity is good, and you can play the bounces too. Even if it continues down, you can have unbelievable mean reversion bounces. And
Yeah.
we saw the equities do it. We saw the SPY bounce all the way to the MA 200 underside, and then we saw crypto, yeah, correlation, but Bitcoin underperformed in this
Right.
last relief rally. There was relative weakness for Bitcoin. Ethereum was incredibly strong, and it gave you a
Yeah.
great trade. 1280 to 2000, and you're kind of waiting for it to come back to the breakout level at this point. So it's underperformed equities so
Right.
far. So that
I
doesn't
agree with
give you a
that.
lot of confidence. Yeah.
And I was a little confused. I have been a little confused as far as just the run that Ethereum had. I think it had. I mean, I think it got to 900 or just a little under 900 in the middle of June. Shot up to 2,000, so it's over 100%. And there's a wide range of coins or tokens. Some that I follow that just track Ethereum extremely closely, or probably 90%. So I was a bit you know I'd kind of maybe have to go back and look a little bit of the history to see if when Ethereum has had these runs, if kind of Bitcoin's just kind of chilled out.
It's different.
Uh,
It's different. Normally, Ethereum has come after Bitcoin, and
right.
if we look at it, Ethereum actually. I'm going to bring on Big Jonas in a second. I really want to hear what he has to say. But if you look at Ethereum's breakout in October, was a huge warning sign on Bitcoin, And if you, I
Okay.
don't know if you followed me back then, but I tweeted out like, now it's Ethereum's turn, and this is bad. If you think 100K is happening, Ethereum is saying it's not.
Right. Okay.
It was all red. That was it, because usually it goes Bitcoin, then Ethereum, and then kind of the altcoins. And it did it
Right.
on minor tops. It did it on the September top for Bitcoin when it was consolidating in that weekly pattern to a lesser extent. But it's a flow you normally see. This time Ethereum led, which was inorganic, and you had the triple negative divergence in Bitcoin, 3 unsupported new highs. It was just not. I mean, it's just not good right now in terms of momentum. But Oliver, this is a great topic. Jonas, it's great to hear you, Big Jonas. What's going on, buddy?
Hey, Chad. It's been a while. Thanks for having me. I figured why not on a Friday night talk about some interesting market price action this week. I almost feel like this week's market was defined by waiting or expecting expecting a bounce, right? Expecting after the previous week's kind of real strong pullback. Are we going to get some kind of a relief rally because we had come back so far? And there were little spits and starts this week where we had some pretty nice bullish price action. If you were scalping, if you were doing like a quick trade here and there. But this morning's unemployment number kind of galvanized what the whole week was basically about, which was to continue to trap bulls and basically rug them on Friday. And the correlation between crypto and S&P, this morning, 8:30, unemployment numbers come out. I don't know, are they good? Are they bad? Like, unemployment's historically incredibly low, right? So what does this mean in relation to the Fed? The market shoots up, S&P's back over 400, and you got Bitcoin, back over 20K again, right? Nice little spike. One of those, and we see this a lot, this like 1 minute candle, $400 in Bitcoin and like $100 in Ethereum. Ethereum actually was up, what, 7%, I think, at the highs today, which is a really good trade if you were even doing a little bit of leverage on that. But what happened as the day rolled on and the S&P rolled over, crypto followed in suit. So there's no like bullish divergence playing out right now, and that's so clear in the market price action we saw today.
It's really interesting. Yeah, I agree with that. And I think it's interesting too. Is it just a coincidence though that like these moving averages are also telling the story? If you look at Ethereum, it was the daily chart, the 50-period moving average was support, 4 days out of 7 while it was consolidating above, and as soon as it dropped below, it was immediately resistance, for the next 4 of the next 5 sessions. So it's interesting how the price is sticky to these major moving averages, corresponding kind of to whatever equities are doing in a certain way, to a certain strength, right? 60, 70, 80% correlation, whatever that may be at a certain time. And you look
Well,
at
I think
Bitcoin
I
and
think
daily
we're getting
EMA
to
too. Yeah, go ahead.
Well, yeah, I think we're getting to like who's left. Like, why was there such correlation in the market? Is because the same kind of trader profile person is what's watching the 8:30 data come out and the algos reacting to it. So that's the market we're in. Now, you brought up the EMAs there, and I think I would just say that what we're seeing here consistently still is lower highs and lower lows, and we're seeing this pattern continue to play out. Now, some bounces are stronger than others, and Chaz, you pointed out earlier that the Bitcoin bounce was weaker than what we saw in Ethereum, but overall, the correlation is a downward trend continuation. And the fact that we had such a bullish move in July, right? Bitcoin to 25K. Ethereum was up 100%. I mean, that's an epic move. Okay. And that's what the altcoins tend to do, right? They have greater pullbacks and they have greater bounces. And that kind of falls along, and we can discuss this later in the broadcast about, long-term holdings and stuff. But this week proved to me again, it reinforced the notion that I've had for quite a while. The markets are all correlated. The Fed is in charge, and we are in a bearish, pressured market right now of de-risking.
Awesome. Oliver, how about that to answer your question?
I think it's absolutely spot on observations. I love the detail for sure. I definitely agree with it. I'm I agree exactly with I'm sorry that his name was Jonas, and he mentioned that we had a strong, basically an expectation this last week or so, okay, for a strong move up. I certainly was expecting that. I figured, oh yeah, this is the perfect excuse on a Friday morning on this jobs report for that to happen, right? And I guess it happened for a few hours, and then call it what you may, what caused the pullback, whether it's the Gazprom thing or people just exiting for the weekend, whatever it is, a combination of the two.
Well, I think that's a strong point to make about the weekend thing, because this isn't just a weekend. This is a long holiday
Right.
weekend. So
Exactly right.
that's added to it. We're
Yeah.
back in September, and I think because we're now finally in September and out of the summer doldrums, if you will, we're going to see more volatility. People are coming back to their computers, their offices. They're back from vacation, so to speak. So there's going to be a lot more emphasis on positioning for the fall and the winter months. And this is why we have historic, crazy volatility in September and October.
All right, that's Big Jonas, coin collector, and that's it. Thank you for your question, Oliver. And coin collector, you're up next. What is going on? What would you like to say?
Hi, Big Cheds. Thanks for everything you do. I've been following you since late last year,
All right.
and
Sounds like
I got a
that
little
sounds like the
Friday
right time. Sounds like you jumped in right at the right time, huh?
exactly. Except me being such a peanut brain, I messed everything up because I got into leverage trading before I got good at spot trading. You hear me? So, but anyway, I've been learning a lot. But I got some Friday humor for you.
I love it.
Okay, let, why is Big Cheds like a frog? Why is Big Cheds like a frog? Because they're both used to being in the green.
I was gonna say he's always hopping across
Sorry,
the
Big
road.
Ched. Yeah. Okay, one more little small one before I have a nice comment and a question for you, if you don't mind.
Please.
How is Ched's like a great surgeon? Both.
Really quirky and academic.
Both are master scalpers.
That's pretty good. That's pretty good.
I'm sorry.
Thank you.
So, Cheds, thanks a lot. And I just cracked open my copy of Schaubacher's book this week.
Oh, that's fantastic. Green
and,
or what cover? The green or the darker one? The black one?
Mine's a yellow and black, I think.
Okay. Yep. It's like the new edition.
And so, perfect. So, like, I'm studying the fundamentals of TA, right?
You'll get it. I mean, you're not going to use the whole book, but you're going to get from it what fits your style, and kind of it will lead to more questions, and then you'll go find the answer to those individual little questions, right?
Yeah.
That's the path. So that's really good.
Yeah. And then just one final comment, I'd like to say to anyone out there who like lost a lot of money leverage trading because it's so alluring, and guys such as Big Cheds are so good at it. I'm leaning more back now toward spot trading, and for some reason, there's way less stress.
Yeah, smaller positions are easier to manage. I mean, if you're going to do leverage, I'd say 2 or 3x. But Jonas and I will differ on that. We can discuss it later. But hey, it's great to hear from you. Okay.
Yeah. Thank you very much.
Thank you so much.
You're welcome.
Real quick, Chad, if I could. The comment about spot versus leverage is one that I think we just can't skip over for a second, because it's really a very important thing that he just brought up there. There are times in my trading career where I've just done mostly spot, like 90% spot, right? And a lot of that just has to do with a small cap or a micro cap asset, and then expecting a big, percentage move. Okay. There are times where that is very effective. And then there are times where you really do need to add a little bit of leverage into the trades, because you're just not getting the return. This is just me speaking, but Big Jonas, but the returns, or at least the risk profile that you've been accustomed to, especially during the market we had in 21, which was just full of volatility in both directions. So there's no right or wrong answer to this. I would just say one thing about the leverage trading is that how many times for me have I had like a streak of 6, 8, 9, green scalps, right? And I give it all back in one just stupid trade, all right? Because I get cocky, I up the leverage, I up my risk, whatever. That's why scalp trading is so hard because of the discipline. So if you kind of increase your leverage, and that's okay to do, as Chad talks about, a 2x, a 5x, maybe a 10, right? But anything more than that, you have to expect that it's just you're not going to get the same return that you're used to. And if things are tricky and you're having a bad streak, going back to spot and heading into that lower leverage trading can really set you up to get back on track.
That's Big Jonas. Crypto Boat. What would you like to say? It's good to hear from you, my friend.
Hey, how you
Crypto
doing,
Boat, it's your
Chad?
turn. What's
Yeah.
up, buddy?
Hey, how you doing?
I'm good, man. What's going? What do you have for us this time?
Yeah. I have a quick question about when the price gets to a key level,
Yeah,
and if the 1 hour is showing that um, it's just going for like a quick test and going back, or and at the same time the 4 hour is showing like a bullish candle.
sure. So
Yeah,
listen,
like
this is a great topic. This is a great topic, and I feel like we talk about it every time. It's funny. So
yeah, it
you
happened to
have to.
me again. It
Yeah.
happened
So
to me
listen,
again.
brother. So let me address it. It's first of all, it's good to hear from you. I hope you had a good week, or since we last spoke, and I'm going to address the topic, but it's a great topic. You really want to focus on the longer time frame. The longer time frame is the trend, and what you're looking to do on a lower time frame is kind of anticipated change in that trend. And you have to realize that most of the time you're going to be wrong, because most of the time the trend will continue, because trends tend to continue. So you've got to know what if I'm trading on the 4 hour, I know what the weekly is doing, so I understand kind of the backdrop, the environment for whatever time frame I'm trading in. So that would be how I answered that. Big Jonas, how do you address kind of this topic?
About getting faked out on the 4 hour and just trying to be able to read that. I mean, I think the basic idea is that if you're doing a 4 hour chart, or if you're doing a trade based on the 4 hour chart, you have to do what is a 4 hour trade, which is basically a little bit longer than your typical 5 or 15 minute quick scalp trade. So a 4 hour, chart trade for me, if I'm basing it on a 4 hour, maybe there's a moving average cross or recapture or even back test, is I have to give that trade a little bit of birth and at least probably several candles of 4 hours to see if that plays out. I'll have my stop in place and such, but and I love scaling it as well. But it's important to know that a 4 hour chart or trade based on the 4 hour or the 6 hour, 12 hour, or the daily, that's a longer time frame chart than something where I'm just kind of react quickly to a quick you know move in the price action. And a lot of times these 4 hour candles need the entire 4 hours, all right, um, to form up. So if you're going to make that decision, you got to wait for it. If you're using the 4 hour and you get 2 hours left for the candle to form, a lot can and normally does it happen in that 4 hour. And the hardest thing to do in trading is to buy that red. So if you're buying based on a green upshoot or breakthrough, it's a good chance that you're probably a little too late into that trade as it is.
Those are words from a veteran trader. That's why I love having Big Jonas here. And if you've been around for long enough, you know that we really don't agree on much of anything. I'll get to you, Blue, in a moment. You're not up next, though. First, we have Burnside Ohana. We've talked to you before. It's nice to see you. What's going on?
Hey, Chad, how you doing?
I'm doing okay. How are
Good.
you doing?
Well, it's a hell of a day.
You doing all right?
Yeah.
Yeah, it is. Yeah, it is, right?
Yeah.
Well, you made it through the day, right? I mean, that's
on a day like this, riding it up and riding it down. We scalp all day, right? So, but I honestly had a question for both of you guys.
Cool.
You know, I'm relatively new to sort of advanced trading, and I've tripped myself up maybe getting a little too mired in certain theories and fundamentals, technicalities, what have you. And so recently, over the course of the last couple of weeks, I've actually dialed it back, and I've been actually focusing primarily only on Bitcoin and the indices, and using multiple time frames with sort of my dedicated trade, and which again is 100% scalps. And my success rate's gone up, you know, double digits, like significantly. And I was just kind of get you guys' opinion as to whether or not you think that's a reasonable long-term strategy, sort of stick to a single asset, and then, you know, pretty much study all the peripheral markers as how they intersect or interfere with that asset.
All right, so this is a great topic. And so, like, the bottom line is the less you focus on, the better you're going to do with it. So that's a great, you know, whether you focus on one crypto, one Forex pair, you know, one, you know, pick your market, right? Or just 5 in one market. Just have a small watch list, because you need to have a muscle memory. You need to have a muscle memory, whatever you're trading, because you need to have a gut instinct, right? And you were talking about, like, you can't get too theoretical. It will dull your senses. So that's like the downside of reading too many theories. It's why I try to pay attention to what no one else is saying on Bitcoin. There's like very few people I want to like they can stand in the water and I can, you know, and just get a sense of what they're doing, because you can't get too faked out. You have to go with your gut. It's got to be your gut, and that comes from experience, muscle memory. You know, bouncing around from play to play is the death of a bankroll. Cut your watch list in half, and you'll see your profits will double. I mean, so I'm writing a book, and these are quotes from my book on this subject that I'm passionate about. I'm like, you know, writing about it. So you're right on track. You hit 2 points. Getting too theoretical will dull your senses. Get out of your head. That's one of the quotes. And the other one is essentially, you know, cut your watch list in half and see what happens to your profits. So,
yes. Yeah,
right
I went from
track.
40
Good
to
job.
1 pretty much overnight.
That's it. So look, just stay on, you know, but yeah, once you're good at what you're trying to do, then you can branch out, you know, so just find a sweet spot and kind of go from there.
Beautiful.
All right.
Beautiful. Thank you, man.
All right. Jonas, thank you, man. Jonas, did you want to, I think he's, yep. So no, okay, great to have you, man. I hope you do well, and we'll talk to you next time. All right.
All right, buddy. Take care. Bye.
Thank you. Just a quick reset. I'm Big Cheds on Twitter. I'm the author of Trading Wisdom, 50 Lessons Every Trader Should Know. You can get that book for free on my YouTube channel, Ched's Trading, one chapter at a time. I have not the whole book there yet, but I'm doing one chapter at a time. It's also available on Amazon. I'm also a founding analyst at Bitcoin Live, world-class team of analysts. You get to hear from me twice a week, full market update. Check out all that information on my Twitter account. I'm here with Big Jonas, who's a veteran trader, actually got me into Bitcoin. And we never agree on anything, which is really fun. And he's a good friend. So I'd like you to hit request to speak. I'd like to hear from you. I'll bring you right up. In order. Next, we have Blue Collar Dangerous. What would you like to say?
Hey, Chad, long time listener, first time caller, my friend. But I love it, man. I love what you're bringing to the table, and you know, I think we need to interact what Big was trying to say. You know, he just kind of touched on it, but there's a lot of fruit on that tree. You have to identify what type of trader you are correctly.
Yeah.
I mean, are you a 4-hour trader? You a weekly trader?
Right.
You a 1 minute? Are you a 1 minute trader?
Right.
Do you work off traditional TA, or do you work off of ecosystem and utility flow and movement and correlation to the individual asset that you're trading?
Oh, okay.
Yes. Yeah. All right. I'm sparking a little interest, right?
I'm listening.
So at this point, for me, I couldn't agree more with what you said, Chad. You know, don't rubberneck. Identify what you're good at. Find the individual asset that you can connect with, because you have to see, if you're there live, you can see the movement as it takes place.
That's it.
Now, that doesn't mean
the context of the move. You understand the context of the price movement.
Most certainly, like you said, the muscle memory of your chart, because the whole thing is, you know, if it takes place, it's visible. It's all about the energy in. Once you identify a rhythmic movement, it's like learning to ride a bicycle.
Mm.
You could take your individual understanding and plug it into an asset that may represent a new utility in the event that you get bored with what I call my cash cow, because I can guarantee where it goes A, B, C, and D, and it will not move without me identifying the correlation of assets that are
Mm.
required to make that individual investment function.
But I think what you're talking about is an active role in whatever you're putting your money into. First of all, you have to be engaged with it. I hear you have a very engaged approach. It's systematic. You're identifying opportunity. You're knowing your limitations. You're doing all of these things that come from kind of at least trying to be aware of yourself. You have to start with being aware of what you're doing in your own behavior. And you can't just throw money and hopefully it will double. It's not like a seed you throw in the ground, right? These are things you have to manage from step one, and you have to avoid pitfalls every step along the way. You're doing all the right stuff. It's great commentary. Big Jonas, what would you like to say to this topic?
Yeah, something that brought to mind about this conversation, which is really important too, because I'm a huge fan of like, follow a stock, follow a group of stocks or coins, and get the flow, the ebb and flow of how they move, because every coin is different. With a different supply out there, um, liquidity and stuff, and how much of it is traded on Binance versus other exchanges, affects how the price moves, and you see some things are just real choppy and kind of all over the place, and some coins trade smoother and everything, so you can really kind of feel the heartbeat of it, and hopefully you'll be able to execute a better trade. um you know Chance and I had a conversation today about, you know if we're really in a bearish market, all right, then unlike the bull market, right, where we were feeling pretty confident to look for and to buy the dips, we should be looking for and short entries and to try and sell the rips. And this week was a prime example of that, where every time the market had kind of like a morning, and I'm kind of correlating this with the stock market, but Bitcoin was so keyed into it. Whatever happened with the overall stock market this week was we had a very bullish mornings, like several times this week, where futures were up and stuff kind of started pretty good, and there was some really nice, small balances, and just faded all day long. And then this morning's move was the exact same thing, just a little more extreme volatility because we had a little more meaningful jobs numbers. So it's the same thing about being able to identify opportunities. Only comes with studying the charts. And Chad's always talks about, if you have too much stuff on your watch list, maybe that's a problem. So whittle things down. Even in this bearish of markets, there's still great opportunities, and I've been eyeing a bunch of stuff that just like, all right, I'm just being patient and patient and patient, because I know that if I watch it enough, I'll be able to get a little bit of that heartbeat potentially, and being able to position a trade out of that.
All right, my man. Love hearing your thoughts always. I know you always watch different interesting markets, and you've got always just you're always keeping an eye on certain markets. So I love that commentary. All right, Wino, you're up next. It was your turn. Wino on street. What's going on?
Hello.
Hi.
Hi. Okay. Thanks for having me on. Been a member of Bitcoin Live since late last year. Wish I had listened to you more late last year, but unfortunately I didn't. I appreciate your updates twice a week. I listen to while I'm cleaning up my daughter's toys. I've got my phone in the other hand and watching the charts. And,
I love to trade spaces. That sounds like so much more fun because it's like, man. But I envy you, right? Oh, that's awesome. So thank you.
So so thank you again. And also I appreciate just in general Bitcoin Live, and
yeah.
And so my question, and I again, if you don't, feel free to answer however you want to, but
all right.
I enjoy Bob Lucas and his cycles, and they've been amazing. Also, in addition to your work, and especially the start of the 60-day cycles, and And, I mean, of course, it's impossible to know how the overall market's going to fare in the high time frame in the next year, but there's a potential, at least according to Bob, and maybe I'm not understanding Bob correctly, that we could bottom out in the next 60-day cycle, which would be November, or potentially early next year, in the next cycle. And thinking of the timing wise, okay, if it's sometime in the next 6 months, maybe longer, what are some of those key support levels, where that could potentially hold, or maybe a quick wick through, that we should look at. And I also, not to just name, I like a couple other guys I follow, Credible Crypto, saying you want to hold 14K.
Mm-hmm.
I'm starting to do my own TA, and I'm looking at 15Ks with a confluence of TA factors.
Yeah.
Kind of look like, all right, and of course you want to see it, and then maybe the support hold, and a little bit of momentum, and then
Yep.
maybe think about it. And of course, if you're a hodler, maybe just DCA in now if you have a long-term horizon. But in your view, what are some of those key support levels if
Yep.
we are going to bottom out sometime, in the high time frame, the next couple of months, 3, 6, 9 months? Where could it be?
So listen, first of all, again, congratulations.
Thank you.
Just on being a dad, all that. That's great. So if you were, and obviously thank you for being a member. I love our team, really proud of it. If you, back in March, on the March 6th report, I talked about a scenario. This is when Bitcoin was at 40K. And I first talked about Bitcoin breaking 20K. Right. And I said, and I talked about why it would make sense, because we had a lot of bear momentum at that point in high time frame. We had the price approaching the prior all-time high at 20K. We'd never broken it before, but I said, hey, what's like the guarantee? We're supposed to guaranteed bounce off that. Why? There's not a lot of price history there. The real kind of meat of the support is 12 to 14K. 14K is the top of the zone. So I kind of talked about a scenario breaking 20K and then kind of scaring people, maybe flushing down to that 12, 13, 14K level and bouncing. That was back in March. And now, now we have a potential. We have a low at 17.5. I can see a couple different scenarios, and I've talked about it. And I love, and it's fun to kind of, when you get more information, to re-theorize, because that's all you're doing. Is you're kind of reincorporating the new data every day. And that's how you can kind of look at small channel moves and bigger channel moves. But 17.5 is your initial low. You could see if you recently, I've been talking about a W bottom, which is a double bottom, but with a lower low and the second low, where you essentially trigger the stop losses. On the way back up to 69K, we saw it around 33K on the way back up in late June. If you remember back of 2021, and you see it a lot where it kind of trigger all the stop losses of those longs who were really smart and bought that first low on that overreaction dip below the lower Bollinger Bands. You could see a potential double bottom at 17.5 with a lower low, maybe 16K, 16.5. That might cause a panic bottom, because listen, whatever TA bottom I talk about, either the double bottom there, the 12 to 14K potential, or it really has to bottom above 10K, because if we get below 10K, it's not good. I'm selling everything I have in my hodl. I mean, no question. You get below 10K, I think we're probably going to stay there for a couple of years, potentially a year or two. You can't, like, that would be such a severe break of market structure, and the trend is already severely damaged because the price is below the on weekly 200 this much, having spent this much time below it. DCA is good, but only when the price is above the MA 200 on the weekly. That's the trend. The weekly trend, right? The weekly time frame is the longest time frame you can look at Bitcoin, because it has a 200 moving average. Monthly is too young from my understanding of classical charting, right? The weekly chart, the trend, the long-term trend is severely threatened right now. So, I mean, you really need to bounce off 12 to 14K if we get there. All of these potential bottoming scenarios need a sentiment bottom. We haven't had it yet. This talk of crypto winter, it's not a crypto winter. You still have too much enthusiasm. If you've been around for multiple cycles, you know that there is a sentiment bottom. We haven't even come close to one yet. What do you say, Big Jonas?
It's true. We haven't had like capitulation, and it's hard for me to say that. It's might sound weird to say that when you look at what happened back at mid June with like Luna, and then Three Aces and then basically everything just kind of fell apart, and that was Bitcoin 17.6 moment. This bounce was very weak, actually. I mean, there were upper targets about 28,000, which made a heck of a lot more sense in terms of just retesting areas that were prior support that are now resistance, and we couldn't even get up. We couldn't even get close to that. And the fact that we fell through 25 to 20 back like
That showed
nothing.
the relative weakness to the equities, right? Because the equities were able to get up to those higher levels.
Yeah, you saw much more money flowing in. I mean, Apple had a rip, like an insane rip. But again, you see what's happening now is you see every time there appears to be money flowing back into the market, it goes to these big cap, kind of safe haven tech, right? Because that was what held the market up basically for the past 10, 12 years. Other thought that came to mind was when you were talking about um, thinking about should you dollar cost, whatever, and Chad's talking about certain prices in the teens. Like, what is you have to define like what you're trying to achieve here. I was thinking today is like if Bitcoin is 10 grand, one Bitcoin is 10 grand on Coinbase, does it make sense for me to just jam it with just buy a Bitcoin, just send 10K to Coinbase or whatever, or whichever exchange, and just buy a Bitcoin? Because I feel, having been in Bitcoin for 5 years now, it's almost 6 years, that 10K Bitcoin, maybe that's not crazy. I didn't buy enough at 3K. I sure as shit didn't buy anything over 20K and 30K and 40K and 50K and 60K, like a lot of people in this market did. But for me personally, does 10K per Bitcoin kind of seem like at least for a moment a possibility where shit, if it hits 10K, then I could probably see a bounce at least to 15 or 16K. So it's a good trade nonetheless.
Right. That's like 10K should hold. Isn't that the point you're making? Like 10K really should hold.
I don't think we're gonna get. Oh, I shouldn't say that because we totally could. I don't know. I don't know what that means. Like, should hold, not hold. Many times, things that have big walls of support get like eaten through to get the flush through, and then kind of have the bounce. The caller also brought up Bob Lucas and him talking about, the next 4 year cycle and composed to the next 60-day cycle. And it's true. We have historic history where Bitcoin tends to kind of find a capitulative bottom in November, December timeframe. Stock market also tends to do something like that too. And then we always start the year, we can start the year kind of pretty strong. Q1, Q2, we're kind of ready to start something new. So there's going to be a good bounce. It's always a good bounce, right? The question is, how low do you go before that bounce, and how long did it take for that bounce to actually like set up? The big trade during this bounce was clearly Ethereum. It was 100% move. You could have bought Ethereum under a 1,000, right, and just held it for what, a month and a half, 2 months, and sold it for 100% more. But if you didn't sell it for 100% more,
but you didn't have
then
to
you
be
just
that
lost.
smart. You didn't have to be
But
that
you just
smart. You
lost
could have
50,
bought
like
the breakout at 1270. That was solid
or
play,
that
right?
too. But then the pullback was 50%. I mean, so if you caught that 10, 11, $1,200 Ethereum, right, you better have taken a lot off the table, or else you just absorb too much of a pullback to make that good trade, not as good anymore. To sum it all up, I don't care if Bitcoin gets to 12 or 13. We're kind of bounce and fall and bounce and fall all the way down. We might hit 16.5 and bounce back to 20K and then get rejected hard again and come back down to 6. It's all about the trade at this point. Unless you're thinking about what's Bitcoin going to be like in 2024, 2025, as we get approached and we get past the next halving, which I feel is less important, but still it's a narrative, then we can start talking about establishing a new base of support. But me being in Bitcoin for 5 years, 3K used to feel expensive, right? Bitcoin's at 19.8, whatever it is right now. So that's still pretty good. It's all relative, obviously. If you came into it in the 30 or 40Ks, you look at it a little bit differently. I think there'll be enough buyers to scoop up this stuff because there's still a shit ton of money in this market and a shit ton of money that has to get flushed out of the altcoins.
All right. Great to see you there. We also see one of our special friends in the audience. Want to say hello there. Wolf, what would you like to say? Wolf Tazi, it's great to hear from you today. Thank you for joining the conversation. And folks, if you have not yet, please do hit that request button in the bottom left, that microphone button. We'd love to bring you in on the conversation and hear your perspective. Wolf Tazi,
Hello,
what's
Shades.
going on? Hi.
Thanks for giving me this opportunity to speak. I just want to ask you regarding this when Binance CEO, Mr. CZ, tweet last on 11 August. He's saying, I feel so sad to who sold the Bitcoins at the bottoms. His tweet was the Bitcoin was around 25,000.
Yep.
So did you consider this a risk indicator?
So did you see my reply to him at that time?
I did not see, sorry.
No, as soon as he said that, I said, how can you be so sure the bottom is in? And he replied to me immediately, soon enough, but not immediately. I mean, that's kind of a overstatement, but within a few minutes. And he said, I'm not talking about Bitcoin or something like that. It was so it was very interesting. So, but you asked me if I factor that in. I mean, so that's interesting. If I'm understanding you, that's a sign of FOMO. It's interesting. Jonas was talking about Ethereum, and it's great to have, Jonas. He's on Twitter, Big Jonas, and YouTube, Jonas Trading. I did a Spaces with Nakamoto Lisk, right at the Bitcoin top, Spaces, and I think 80% of the questions were about Ethereum. And they were mostly I can't wait any longer. I have to buy here before it goes to 3K. If you want to do a case study, and I was thinking about retweeting this Spaces. If you want to do a case study and FOMO at the top, and it was so very interesting. So that's those sentiment extremes mark price tops and price bottoms. So even bottoms within just consolidation ranges, as that tweet from CZ Binance was, kind of an enthusiasm tweet right at a key resistance, the May 12th low. And with the kind of backdrop of kind of just the structural weakness on the Bitcoin chart at that point.
Seriously, it's such an irresponsible tweet he made too. For him to say that, I feel sad. I pity people who sold at the bottom. I mean, the hubris of this guy.
I mean, yes, but you know what? It's convince. What is that Mark Twain phrase? Convincing a man of something that his job depends on. You'll never be able to do that. There's some phrase like that. That's his role. Is he's just trying to do whatever he can do to be better at whatever he's doing, and that's what he's all about. So you can see,
it's very charlatan. It's very oh, you're the moron who sold at the bottom, but he's the one that profits from all of it, regardless. So it's just kind of it's something that you wouldn't expect someone with that much power, right?
But you understand it. I think it's forgivable. It's just enthusiasm. He's just enthusiastic, and it's just he's marking. He's a mouthpiece for the retail at that point, and that's saying, hey, retail's excited here. So that's information. That's value, is it not?
Yeah, but he's saying I feel sad for is putting him on a higher pedestal than others, and in his position, I mean, if he's Binance, I mean, this is it's something that if this space has ever kind of really, find that institutional investor stuff that we all talk about, comments like that I mean, he's pitying his own customers. I mean, that's ridiculous. And I think that's that hubris, that laser eye hubris that Matt Damon, right? What was his saying? Fortune favors the brave. It's the same thing. And I'm sure there's a lot of brave people out there that lost a heck of a lot of money in this market.
Doesn't that sound like a cologne, like a logo for a musty cologne? It's like a Fortune favors the brave. You're like, what? So anyway, yeah, listen, I mean, but we're it's forgivable because we're emotional. I'm forgiving him, but the retail sentiment I'm talking about, because we're emotional participants and we get excited, we get dejected. It's just part of the journey.
Bitcoin to go up, which is fine, but it's about people that would say you're stupid or you're bad or you don't know what you're talking about by saying something like, be a little cautious or take some money off the table or we're a little overextended, all that stuff. And to be, it just all came back to roost. And, Cheds, as traders, like we've done this for years. We were part of that, FOMO crew back in the OTC days, right? That were being influenced by people that were saying, don't sell or wait till the financials are released or there's about to be a big PR or something. Well, in essence, we were just this exit liquidity for other people that had been through it before and knew what it was. It was a liquidity grab during a bull market that we had never seen before, and it really felt like a huge blow off top to me. There's still a lot of money in this market, and that's the thing that catches people off guard. It catches the bears off guard, is to have these vicious bull market runs. Hedge funds were leveraged short, and that them having to cover was a lot of what pushed the markets up in July into August there, and it was a nice run. But you see how quickly they turned over, and that just goes to show there's no buyers in that area there. And this weakness the past 2 weeks is showing what the market is responding to, which is a Fed who's going to be no longer accommodative, and people are taking risk off assets off their balance sheets, and that clearly starts with Bitcoin and crypto. Crypto is the most riskiest. That's why you're seeing the bottom fall out in so many DeFi and NFT projects as well.
I love it, Big John. So, Wolf, did we answer that for you? Kind of what you were asking, Wolf, before we move on to the next one?
Thanks so much.
Hey, thank you for stepping up. We appreciate you. Hope you stay safe. Hope you do well. Next up, we have, let's see, Sunrisa. You've been waiting. What is up, Sunrisa? What would you like to say to the group? Folks, you may still be able to get in on the conversation. Go ahead, please.
Oh, my goodness. Well, first off, I want to say thank you so very much. I bought your book. Oh, gosh. Back in summer.
Sounds like I should be saying thank you to you.
Well, I thank you very much. And I've shared that book with my kiddo who is in high school.
Okay.
Just some of the wisdom I think that you can take out of it that doesn't necessarily have to do with finance. So
I like it. Okay.
Okay. And it's great words. So anyway, so thank you for that.
Okay.
I've definitely been learning a lot. I struggle very hard with dyslexia.
Yeah.
So the charts and myself argue a lot visually.
Interesting. Here's my advice. Yeah, so I understand that. I have a really great friend with dyslexia. I'm actually hanging out with him tonight. So what I would think, and as for someone who kind of studies psychology and I think a little bit about learning disabilities and all this stuff, I think you have to simplify as much as you can. With that in mind, whatever you're doing has to be incredibly simple. And even if you're going to trade something, I would preset all sorts of alerts at certain levels, and then I would double check the alert like 2 or 3 times to make sure you set it right, but once the alerts are in, you have to at least trust your alert system, but create like a system where it's something you can trust, because if you can't trust your kind of ability to make it like a cognitive decision, you have to work around that. So simplify, create this kind of alert system to let you know like when the price is in a certain area, and then you have to have kind of a more swing-based strategy where you're not jumping in the 1 hour. You have to catch a broader movement. One you can kind of sit on, and not because like shorter time frame trading is really hard, and you're always going to be questioning yourself, and so that it's just I would simplify and trade on a longer time frame.
So I'm like at a daily, weekly,
watching
those, but I still
here's what I would do. I would play nothing under the 200 MA. So just start with that, eliminate that, throw those out, number one, and that'll save you a lot of trouble. So then now you're playing only uptrends, right? Or at least price over their 200, like a downtrend trying to reverse.
Fabulous.
So that's a good. Then I would cut your watch list in half, at least.
It's tiny.
How many? How big?
It's 6.
Mm-hmm. That's good. Okay, that's fine. What about indicators? What's your setup?
Oh, what is?
This is what's
Off the top of
important.
my
What's your
head.
setup? Yeah.
I have to look what I am looking at. I am not using RSI. I can
It's
tell you
okay. I
that.
mean, okay.
So
People
I'm
are like
using.
afraid. People are like afraid I'll hang up the phone if they say they use
No, I'm
RSI.
using. So I am using an MA cross and
Okay.
Bollinger Bands.
Good. Yep.
And then
Okay.
watching, there's an interesting kind of fear and greed, which has actually been
Like
fairly
index.
interesting. Yeah, fairly interesting to watch.
Don't
Not
look at it. Don't ever look
index.
at it.
Don't
Don't
ever
ever look
look
at
at
it.
it.
Don't
Well.
ever. No, just look at the price. It's holding support or not.
Check
All
Look at the.
right.
All right. Look at the price, and then horizontal levels, no diagonals, and
Right.
just you clean it up. Clean it up real nice. Jonas, what do you got for us?
Yeah, I was thinking about what you said earlier about dyslexia and having the problem with that. That's what I had to deal with, and what I found. So I'm like much better of a visual learner, and numbers always would be a problem for me, especially when I'm reading a screen or on paper. So how do I visually, look at a stock chart or a Bitcoin chart? Well, as you mentioned, you use the oscillators, you use the moving averages. So that's a great way to do it. Look at the moving averages, not necessarily based on how the price interacts with them, but how they interact with each other. And there's no right or wrong answer as to which moving average you prefer to use. Chad's using EMA8. You like to use the heck is it, the 9 and the
12.
12? I can't remember. Yeah, the 9 and the 12 or something.
12 and the 26. Are you okay?
Right, 12, right. I can't remember that. Yeah, 12 and 26, or I'll just use, MA 50, 100, 200 on certain time frames. But look at how they swim. They're like little spaghetti bands, right? But you get a sense about their angles and how they like to swim smooth. But if there's a quick jerk, or they fall too fast or rise too
How they
fast, then
fan out and how they
yeah, then
flatten.
it's telling you something. So that's kind of the visual representation of the chart. The last thing I'll say about it is, I know Cheds is a big candlestick person, but there's other ways to look at a chart than just Japanese candlesticks. Try playing around with the line chart, where you basically kind of ignore the intraday noise or whichever time frame you're watching, but you just basically have an end of period price that sets where the next line moves, and that kind of filters out a lot of noise, and it's just very clean that, okay, here's my lines, and am I able to put in higher lows and higher highs, or am I putting in lower highs and lower lows, and that visual representation versus the price, for me, has helped me kind of understand better. And with a dyslexia or learning disability issue, being able to adapt from, you don't always have to look at the numbers, but you can definitely use the visual aids of oscillators to help better see the chart and make better trading decisions based on that.
So I did switch over to the Haikanashi.
Mm-hmm. Oh wow. Okay. See, now we're trying to get fancy.
Is that fancy? Because it seems.
Haikanashi is actually interesting. It's a very slow, but you're gonna. Yeah, that's a super
You
swinger
have to know how
strategy.
to read it, though. Like, I love Haikanashi, but you have to know what you're looking at, and you're not using it like Haikanashi. You don't want to use it as price levels, because it's not following the price level. What you're looking for is the shape of the candle body. And very bearish Haikanashi, right? Very big, almost Maribozu, or big with long legs under it, right? And when you're looking for Haikanashi, you're looking for that trend reversal. So that trend reversal is going to be that tighter doji candle, or a combination of those, that super tight body and kind of smaller wicks that shows the volatility is subsiding. And technically, or what happens with Haikanashi, and I like to use it on the daily and the weekly, is those tightening formations after a longer period of the same candle, red or green, tend to be reversal. So that's kind of how I like to use it. But if you're using Heikin-Ashi, you have to ignore what the price is of Heikin-Ashi because it's not representative of the actual price.
It's interesting. Heikin-Ashi as well, it's known, it's the average bar as well as kind of quote is what it's known as well in kind of candlestick theory. And you make a point, it's not the price. It's interesting because you can look, with regular, Japanese candlesticks, open, high, low, close. You're looking at the size of the candle body progression, and you think about, large body, medium body, spinning top doji, right? 4 candles in that progression. You see the compression of force inside, then usually an inside up and continuation, or do you get inside down and kind of a breakdown? That's your doji or small body in the Heikin-Ashi. I wouldn't just jump in and do that necessarily. I think that's a little bit more advanced, honestly, but it's great to have you up. I thank you for the book, and I got more coming. I'm gonna have another one coming by Christmas. So
looking forward to it.
Sweet.
Thank you.
All right, cool. Do you have the Audible version of the book yet?
I do.
Okay, you do. All right, cool.
Yeah.
All right, thank you so much. Appreciate it.
Thank you.
Cheers. So that was really nice. All right, Cardinal, thank you for being patient. It's nice to see you again. Talk to you again. Neither be nor be. Thank you for being patient.
Yeah, it's all good. It's all good. Yeah,
Hello.
So, can you hear me?
Are you there, my friend?
Hello, can you hear me?
Why don't you try it again? All right, David, what would you like to say? David, it's your turn.
Yeah, thank you very much, Chad. How are you doing?
Pretty good,
Chad.
man. What's going on with you?
Not too much, actually. Apart from macro condition, I'm a huge economist in the sense of I try to study a lot of macro analysis in that sense. And I was wondering your perspective on Bitcoin and its relation or inverse relation to high beta stocks. Specifically, when we go look at Michael Kantrowitz, one of the best analysts on the streets, he posted out this chart that I just posted in the nest. You can remove it once I'm done discussing it. But it just demonstrates a lot of the relations as to the SPY and actual Bitcoin price action in that sense. And I think that if we are going to see more confluence within, let's say, the SPX and all of the other formal indexes, and specifically more strengthening within the DXY, well, we can assume more downturn within like the NASDAQ and all of these formal indexes. And seeing as Bitcoin is trading as a formal beta in that relation, we can conclusively analyze a downturn within the Bitcoin market.
Yeah, I mean, I think that's good, solid conventional wisdom. I mean, it's clearly correlated. It doesn't mean it's 1-to-1. There's a question of, yes, it's correlated, and how should I make my month or 2-month or 3-month decision? And there's the trade that's in front of you, because what you trade is what's in front of you, right? And for example, in the most recent bounce, Bitcoin could not make it to the daily MA200 to even underside test it, whereas the SPY did it, right? So there was relative weakness to equities market. So they'll move in concert, but these assets don't move 1-to-1. So when you're executing a trade, you're executing a trade based on that chart. And that's a really important point. I think people get caught up too much in like what's going on outside of the chart they're trying to trade. You need to be so disciplined that you're making a decision based on only what's right in front of you, because the price either holds support or not. It's a bullish chart that just broke out, and now it came all the way back down to this key level, and you have to be ready to buy, even if like the rest of the market is on fire. You have to play each chart based on what is in front of you. So there's those 2 points. They'll move in concert, but there's relative weakness or relative strength, and then within each asset class, you have that as well. Clearly, it's a beta asset, and it's for people. It's when times are good, let's go throw some money in Bitcoin. Chona's made the point, though. We're still at like 19, 20K. And, when it was just recently, for me, it fell, just recently 3K. I get it. So it's still got meat on the bone. It doesn't mean it can't bottom here in the teens and go rip back to at least 50K. I think, for Bitcoin, I think Bitcoin has a real nice bounce coming at some point. I think probably Q4 this year, but I don't see it going, more than like 40, 50K.
And
talks. But that's kind of an optimistic scenario for me. That's if we kind of bounce off 12, 14K.
And if you don't mind, I continue a bit. Given the fundamental shift within the market, specifically the equities market and the bond market, we see that inflationary pressures are much larger than we had anticipated. Key rate hikes by the Fed is quite interesting in that sense, and market reaction is quite volatile. What is your perspective as to how that relation is either going to strengthen in that sense?
Great question. And I want to say thank you for stepping up. I'm going to kick this one over to Big Jonas, but it's a great topic. Thank you.
Yeah, we talked about earlier about the correlation, especially what happened this morning with the stock market and Bitcoin and everything basically moving in tandem. I think that's going to continue, and I think you have to ask yourself, like, who's trading this stuff? Who's left trading this stuff? There was a whole new crop of people that came into this market that have never traded before, or thought the stock market was just way too advanced, and all of a sudden Robinhood comes along, free money from the government comes in the mail, and all of a sudden it was this perfect storm of people flush with money who were sitting at home with internet, nothing to do except trade stocks and crypto. And that was a big precipice for what basically created this unprecedented historical bull market we just kind of came through, and we're basically deflating from in a very interesting way right now. So yes, the correlation is there. Now, in terms of any kind of decoupling, there's going to be a decoupling, but it's not going to be it's going to be relative, right? Because we talk about the stock market, but there's a lot to that. We talk about the Dow, all right, but that's only 30 stocks. Well, the S&P 500, that's 500 stocks. The Nasdaq 100. We're talking about these mega cap, big cap, and because such a small amount of them, and it's kind of interesting how similar it is now to crypto, where Apple, Microsoft, Google, Amazon, Tesla, take up such a large chunk of not just the market, but a lot of these ETFs and stuff that kind of comprise the market. Similar to crypto, where you have the top 10 coins, stable coins, what have you, are such a large percentage of the overall crypto market, and it kind of falls off the cliff pretty quick after that. But still, that cliff is hundreds of millions of dollars, if not billions of dollars, of, in my opinion, dead money. So where does that leave us? The correlation will continue because the Fed is running the show. And I don't see a world where we have a bullish crypto market with a bearish stock market, where there's some inverse, where there's some safe haven created in, I got to take my money out of Apple and my 401k and put it into, Dogecoin or ETH or Bitcoin, at that moment. It's going to be a rising tide that kind of stabilizes the market. And that allows a floor that can be a lot lower than most people can really postulate. And that's where you really, truly can flush out all the speculators and all the dead money, and then begin to build an actual stabilized foundation for the next bull run.
Great to have you. We're going to wrap it up with these last few guests. Cardinal, did you want to try again? Neither B nor B. Let's see if your audio works this time.
Hey man, can you hear me now?
Yeah. How are you?
Yeah, I'm good. I decided to come on to ask for your help. I'm a new trader. I use RSI for divergence. I use fair agreed. I use bounded oscillators to call bottoms. I don't know. Can you help me out, please?
Yeah, stop doing all those things.
Yeah, I'm just kidding, man. I don't do that. Come on, I've been following you.
So, all right.
Yeah, for Euro CHF, did you follow up on the trade? Because I noticed your first stop probably, like, you got stopped out, I'm sure.
Of what?
Euro CHF, Euro franc.
Oh no, I got back into that one. I'm still. It had. Yeah, I had the dark cloud cover, and then it put in that shooting star.
Yeah.
I'm still in that. Yeah, I think that's going lower. That's a nice.
I tried to get in once today. I got
the
stopped
dollar
out.
versus the franc. So euro versus the franc. Yeah. Oh
yeah.
yeah. It
Even
looks like
euro versus the dollar
that's it.
too.
Looks like it's rolling over. Maybe what?
Yeah, it's rolling over actually.
Yeah, I hope it does. I mean, that's the trade. I mean, it's a nice lower to upper Bollinger Band move in a downtrend. This is just a simple setup I look for. As I look for a movement against the trend, you have a pretty well-established trend, and then you get a really nice bounce in that trend. It's almost what just happened in Bitcoin. As Bitcoin was at 25K and started to push up towards 28, Chonas talked about how it couldn't even get to that level. As it was in that area, you're starting to look for the fade pretty seriously. We'll
Yeah,
see that with that Euro CHF.
was it the May 12th? I think I saw it rejected 25 something, double outside bar, something like that.
On what? Oh yeah,
Bitcoin.
Bitcoin had nasty double outside bar with triple OBV bear divergence. Those are
Yeah,
ridiculous. I've never
actually,
seen that before.
yeah, I knew it was so clear we're going to resolve like to the
Yeah.
downside.
But Ethereum was so strong. The question was, could Ethereum continue to bring Bitcoin along? And
Yeah.
we got that answer when Ethereum rejected at 2K. So, that's where we're at. Jonas, do you have any kind of thoughts in this? And great to hear from you, Cardinal. And Big Jonas, sorry, he's just getting his audio ready. I do want to hear just his thoughts on that. And Cardinal, thank you so much. All right, he's gone for a second. I will have to bring him back on. But in the meantime, it's good to hear from you, man. All right? We're going to wrap things up. It's kind of late here. So thank you so much.
Yeah, it's all good, man.
Thank you, bro. Thank you. Take care. Big Mr. Functioning ETH, what's going on?
I'm doing great.
Good to hear it. What's going on?
I'm fine. It's my first time of being in this kind of space.
Okay. Okay, well, say hello. Well, do you have a question?
No, I don't really have a question, but I'm okay with what I've just heard now.
Okay, well, I hope you have a wonderful evening, and thank you for listening, okay?
Thank you. You're welcome.
Okay. All right, next up we have Zen Crypto. You've been waiting. What's going on, Zen Crypto?
Hey, morning.
How's it going?
I'm from Singapore, so it's morning on my side. So
I know, right? Nice.
I just want to say a big thank you for your stuff. I've been a member of Bitcoin Live. I bought your book, Trading Wisdom. So I'm pretty looking forward to your third book. I think those codes are
Thank you so much.
relevant for me. I've been like trading, like a hobby for like the past more than 10 years. Started with FX and then recently crypto. But then like after looking at your stuff, I get more, because of this drawdown, I get to learn so much more, and having your stuff has just helped me a lot. So maybe I just want to ask you two questions. First one, so when you put your stop loss, do you have a buffer for, the clear resistance and support levels such that you don't get wicked out so easily? Yeah, because there are a few times.
There's no way to avoid that. The funny thing is, you have to expect the market to try to trick you out. Like they're going to the market will make it as difficult as possible for you to actually execute what is a really good idea. So, like for example, if you look at Bitcoin, what happened? You had that, triple bear divergence. We talked about that, but you had those like big upper shadow in that, there was the gravestone doji, and then you had the price retesting it. So if you shorted on the doji, it broke the top of the doji. Now you got stopped out. It formed an outside bar. Now you're short again, and then it broke the top of that outside bar, triggering those stop losses. I mean, it was a ridiculous setup. It was a really crazy setup. So when you have a good idea, you have to be prepared to try maybe 2 or 3 times if the trade idea is revalidated. You have to be prepared to get stopped out at least once, which is why you have to have a pretty tight logical stop loss with kind of with that type of a method where you're expecting to maybe get stopped out because it's right at a key level. So expect the market to do it, come in lighter, smaller position, and that will help you navigate it better. Like, how do you handle that, Jonas?
Well, you can be right and you can be early and be, stopped out of your trade super easy. The topping pattern we just saw of Bitcoin at 25K was brilliant. I mean, talk about max pain, right? We had 3 days in a row where we put in a higher high only to close with a nasty wick. And I think the third day took people off guard, and that's what the market does. Even you can look at it any time frame. This morning, where I was looking at the SPY before it rolled over, and it gave like these kind of up thrusts, and it was like so hard to kind of keep that short, right? Because the market did so much to try and like Oh, am I wrong? Prove me wrong, prove me wrong. Um, so it's one of those things where you can't expect things to just hop on a candle. It's a process. So if you were right to short Bitcoin, let's just say around 25K, the market is going to do everything it can to finally try and stop you out. And it wasn't until that last upthrust that would have been the nut, short entry. But I'm sure that frustrated a lot of people that, were trying to short. So the whole thing is that exchanges will do their very best to get you out of your position. If you're using a higher leverage, okay, you have to absorb potentially more of a loss. If I'm doing a higher leverage trade, a 5% stop loss isn't going to cut it. A wick will blow right through that. So you have to risk the money. You got to put the money up, and you got to take a little more of a higher risk and eat a little more of a loss if that's the case on a higher leverage trade. On a lower leverage trade, you have to give some deference to that volatility in the market. But on a lower leverage, that's the advantage of that, is that you're allowed to kind of, absorb that kind of thing. That's why trading with leverage and trying to kind of swing trade it, is incredibly difficult. To get that nut entry with higher leverage is incredibly hard. And that's why a lot of people end up failing with that on the leverage trading. That's why higher the leverage, the quicker the trade should be executed.
All right, I love it. More perspective from a veteran trader, Big Jonas. He has come out of his hole. That means I think spring has 3 more weeks. It's great to have Big Jonas. Did I get that wrong? Next up, we have thank you, Zen Crypto. Great to hear from you. And Tahel Hamuai. You will be the last one
My
tonight.
name is Taha. I'm Moroccan. Sorry for the name.
Oh, can I have some what is it? Tangier? Really
Yes,
delicious Moroccan food. Oh my, tangine.
yes, Tajin, yes.
Tagine, please. Oh my gosh.
Yeah,
Do you deliver? Oh my, I'll pay whatever I have in my pocket.
yeah, if you're willing
So
to
good.
pay, yeah.
So good, brother. I had a good friend. I worked with a guy in a restaurant. He was Moroccan. This
Yeah,
guy was a chef. He was a really nice guy. So I had a good
yeah, we're
experience with
very
Moroccans.
known for being nice.
Yeah. So what's going
Yeah.
on?
So I just want to ask you, where do you see Bitcoin go in like in the next 3-4 months?
3-4
Like in
months.
November and the end of December, like the end of
We
2022.
probably bottom for a good bounce here in the next 3-4 months.
And you think we're touching 14K or no chance?
I think there's a 75% chance we do.
Yeah, that's what I think also. And
But
I want
look,
to
we
ask
can
you.
bounce here. We can bounce here around 17K. I think
Yeah, I
with a
know.
slightly lower low. If we break the
Yeah.
17K low briefly and then bounce, we could.
I mean,
bounce.
I've seen you tweet seeing 17K as bottom, like in June.
Well,
But
yeah.
but
Test
it's
it, and then bounce.
yeah. I'm still thinking 16K is inevitable, but I
Yep.
don't know. A lot of people talking about 10K, so I think it's the same.
Everyone has an opinion.
Like
Everyone has an opinion, right? We'll see, though, right?
yeah, I think the 10K is like for the Bears, like when the Bulls thought they were going to 100K. I'm thinking it's the same thing right now
100K.
for the Bears.
Is it though? Is it the same price distance? I mean, is it though? I mean,
Yeah,
Bears
I
have a
know,
lot of
no, not
control of
really,
the
but
momentum right
yeah,
now. You've got a lot of momentum. Look at the weekly chart. Look at what the price is doing below the weekly 200. I mean, the onus is on the Bulls to do. Bears don't have to do anything. Like, this is the
to hit
climate.
12K.
So you have to approach every discussion from understanding that, like, Bears don't have to do anything right now, right? Like, so that's the whole point. So, all these targets are on the table, and so we can make educated guesses, which we're trying to do, about where it might bounce. But the best you can do is identify where there is support, because there was a battle there before, and someone bought there and someone sold there. You've got price history, but you've got momentum. You can quantify momentum. You've got some strong momentum in this direction. It's a strong trend. So all of those are on the table, I'd say. Jonas, do you have any thoughts on that?
Yeah, I mean, I think, again, it's like, what do you kind of do? You wake up one morning, Bitcoin's at 14K. Are you thinking, oh, this is a great buy? Or are you thinking, I want to wait till 10? and then it bounces to 16K, and now you pissed you didn't buy at 14K. I mean, that's the cycle we're having to go through. Does it make a difference? How are you making the trade? Are you doing a leverage trade? Are you just buying spot? Are you adding to a longer term hodl? Is Bitcoin the right thing to add to a longer term hodl? Why aren't you looking at other coins? They have a better risk versus reward, but they're riskier in the sense that they might not last long enough. So you have to ask yourself, what's your plan? You know, if Bitcoin gets to 14K, are you buying it because you think it will be something that will be eventually 100K, or are you trying to trade it from 14K to maybe it bounces to 16K or 20K back for like a day cap bounce or just a retest of previous support, now resistance? So we throw out these numbers like, oh, if it gets to this price or that price, I'm going to buy a ton of it. But in reality, if it ends up getting there in the time it does, believe me, it's incredibly difficult to buy a bloody red candle and to catch a falling knife. You just have to have a larger perspective on what you're actually trying to achieve. And if you're trying to do that with high leverage, there's a very good chance to kind of, get stopped out, or at least be propositioned with a chance to, make that good trade, right? How many times do you see that volatility where something goes so far down and then comes back, several percent, and you're like, all right, I'm tempted to take the money, right? But then you don't, and it comes back, but then, the next week off, you had held it, blah, blah, blah. Well, that's not how you want to trade. You're never going to survive that way. Take the opportunities that come to you. I think we're going to see a lot more volatility in the next 60 days. And if we see the right kind of volatility, that can mark a bottom. As Ched said, there's a good chance. Sure, there's a good chance. But for a November or December bottom to be set into Bitcoin price action, we have to see the kind of volatility that can warrant it, the kind of just nasty flush that will basically allow the market to buy it up, and some nice lower wicks to form to really kind of establish that. And I've said this many times, we're not going to know the bottom is in until potentially a year or so after it actually happens. We didn't know the bottom was in 2018, right? Until 2020, when it was retested again and came damn close to hitting it again, only to bounce and head on its run. So we're not gonna know the bottom is in. It's just think about that, and then you can figure out. And don't be so stressed about it. There'll be plenty of time. Okay, if Bitcoin goes to 10K, there'll be plenty of time to buy it at 10K. Don't you worry.
Thanks, man. And I just have one more question.
Sure.
What leverage would you recommend a beginner?
Maybe zero. I would do like what if you're gonna try 2x, start with 2x. If you're profitable at 2x, then you can go to 3x. If you're profitable
Okay,
at 3x,
okay,
go to
okay.
5x.
Thanks, guys.
And
Thanks.
then there, okay.
Yeah,
Yeah,
thanks. Thanks.
2, 5, 10 is great to start with. Anything over that, you're just playing, and
2, 5, 10.
it can be fun though. Like you can do a 100x trade if you're using like $30, right? And you want to just think you nail a bottom, but you do that trade, right? Do not take a 100x trade or a 75x trade, on a time frame more than like 5 minutes. Really, it should be like the 1 minute chart where you're trying to nail like to the tick within like $10 of price action, right? That's the only way that trade is going to actually work. So it's okay to use higher leverage, but don't use a lot of money behind it, and expect to basically either lose all your money or have a stop loss somewhere around 40 or 50%. And that's just how those kind of trades work.
There you go. That's why we never agree, but you do get two different schools of thought. I love having Big Jonas on. I'm, of course, Big Cheds. But Big Jonas, did you want to kind of wrap things up and say anything before we head off? This has been a great conversation. It's been a lot of fun. What do you want to say in your kind of parting message?
Yeah, Cheds, appreciate you having me tonight. Listen, it's not an easy market. We just had this full, bull-hard euphoria as Bitcoin was approaching 25K, and a lot of people got very bullish on Twitter and stuff, and as Ethereum, got back to close to 2K, and the whole, notion of the upgrade and Vitalik and his hard-on picture It got the market really excited, and what happened after that? Everything fell through a cliff. Ethereum, dropped, 25%. Bitcoin dropped from 25K back to under 20K, uh, like it was nothing. Like no one thought that between 20 and 25K was a value price for Bitcoin as to how fast it fell. And the way the equities markets responded this week, heading into a very historical, volatile, and bearish time in the economy in stock market history, the correlation is like 1-to-1 with crypto. Actually, the volatility is there, right? No other stocks were up 50% or 100% the way Ethereum was, right? But then nothing fell as fast as it did either. So you get the risk versus reward, and that's why we do enjoy trading crypto in sometimes. So just don't overextend your time, overextend yourself, and burn yourself out in these times of low volatility, because we just came through a very low volatile time, to be more patient and wait for a much better opportunity. I guarantee you there'll be much better trading opportunities in the future. And unfortunately, those opportunities tend to arise from capitulative events. And I still feel we need to see that and go through that to flush out a lot of the speculators and a lot of that money that's still in this market. And on the other side of that, when you see prices that you can't believe are so low and they go even lower, those are sometimes the buying opportunities, those blood in the street opportunities, that if you're a believer in this technology and Bitcoin and some of the other ones, might just be one of those things that you just take a stab at and take a position in and try and, trade it, invest it, that kind of thing. But I still think we have a long way to go. I just can't imagine this market just decides to bottom in the next 2 months. It just doesn't make any sense. I still think we're into a much longer crypto winter than others expect. But even in that, we can have tremendous opportunities for bounces and trades. And I think that's what, as traders, we really need to focus on. So during this time period, hone your skills, get better at what you're doing. There's better opportunities out there. Be patient, and I think, if you do what Ched talks about, which is to always be learning, educating yourself, and just trying to find a way to become your own trader, and not rely on a variety of people that you feel you need to have them tell you what to do. There can be a point, and I speak from experience on this, where you can basically realize that, oh, I know what I'm doing and I know what I'm looking at, and only with experience, time, and the effort and the dedication to study and to learn. And there's so many great resources out there, Ched's book among them. So thanks again, gents, for having me, and be safe out there. Everybody have a great weekend, a long weekend, and we'll see you on the flip side.
Every time he speaks, he's authentic. That's Big Jonas. He's been trading a long time, and he's been through it. So he's just always great to have him. Always great to have him. And when he's here, it's easy for me to do these spaces. So this has been a fun conversation. I never really know when I'm going to go ahead and do one of these. It does take it takes something out of you to put it on, but it's worth it. It's always worth it, because I get to hear from you one-on-one. We have a great conversation. And there's some great questions tonight. Great people, great topics, and a lot of kind words as well. So thank you for the kind words. I'm Big Cheds. You can find me on Twitter at Big Cheds, the author of Trading Wisdom. It's available on Amazon, Kindle, hardcover, paperback, and Audible. I did narrate it myself. I do have another that book, though. You can get it for free on my YouTube, Ched's Trading. I have beginner tutorials. If you're learning how to trade, watch the masterclass playlist. If you're interested in more of these spaces, this is available in the playlist on my YouTube, again, at Ched's Trading. Then the playlist is called Spaces, Twitter Spaces. This will be uploaded later. If you're listening on replay, I want to say thank you for hanging out. Likely you're hanging out with me in the chat room, and we've been kind of listening to it. There's also other playlists as well. Check it out. I hope you do enjoy it. But that's the free version of my book on my YouTube channel. I'm also a founding analyst at Bitcoin Live. It's a world-class team of analysts, literally world-class. Somehow I got involved with it, and it's worked out really well. For 4 years, I've been doing market reports twice a week. I stop whatever I'm doing. I record a market report. It helps. I think I really have to credit it with my success. It just kind of kept me working on it all the time. And so practice makes better. You never really get to perfect. But anyway, that's Bitcoin Live. If you're listening again, thank you. I hope you've enjoyed it. I've enjoyed it. If one thing I do want to say real quick before I head out, and it's getting late, I would have continued the conversation. If you haven't requested to speak, maybe think you'd do it about doing it next time. I hope you consider doing it next time, because I'd enjoy hearing from you and hearing your perspective. Because you are adding to the conversation. So it's just a lot of fun. Thank you, everybody. I hope you're doing well. Just I would say go easy on yourself. Work within your limitations. If you're struggling, take a step back. Don't lean into the struggle. Kind of take a step back. Give yourself, maybe bet less next time. Maybe be a little more patient next time. Are you journaling? Are you writing down your trades? Why you entered, what your plan was, what happened, right? You're never going to learn if you don't do that. So I would encourage you to take it seriously, and then I think your results will improve. So it's been fun to do this. I hope you've enjoyed it. I think I said that like 6 times. But anyway, thanks for hanging out with me on a Friday night, and definitely thank you for Big Jonas for him to come. That was fun. He's a good dude. So anyway, thank you, folks. I hope you have a great evening. We'll talk again soon. Big Ched's out.
That was great. That was just a week ago. Sorry for the echo. I'm changing my office. But so that was just like I said. I love these conversations, and I like to upload them to YouTube for safekeeping. As you've just heard, the questions are great, the conversation's great, and it's fun just to talk to people. Maybe I'll do one tonight. We'll see if I'm in the mood. I'm going to start doing YouTube videos. I'll have chapter 17 for my book coming soon, and a regular market update starting next week. So I'm getting back into the mix. Anyway, thank you, folks. I hope you enjoyed this, and I will talk to you soon. Peace out.